Good day to everyone joining us from around the world. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Aidan and I'll be guiding you through this exciting 2-hour journey as your host. So today's live stream is not just a presentation, but it's a conversation, and it's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I am not here alone. I am joined by two remarkable guests who help shape what WeMasterTrade represent today: skilled traders, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful Helen. Welcome, Helen.
Thank you so much, Aidan. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategy or rules. It's about the full ecosystem that WeMasterTrade offer, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trade, it's build traders.
Absolutely. Suha is someone who brings sharp analysis and clarity to every chart and conversation. She's strategic, she's sharp, and she's a real force in our trading space. Please welcome Scarlett.
Thank you, Aidan, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is what we're going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our promotions to scaling and long-term profit sharing. If you ever have questions or even doubt, today is the day to ask them.
And that's exactly what we're here for, whether you're brand new to WeMasterTrade or already a part of our funded trader program. Today's live stream is going to give you the full picture, not just the highlight reel. Over the course of the session, we're going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we're doing things differently from traditional brokers or platforms. So now I want it to be clear that this isn't just about sales, this is about understanding, as we want you to know what you're signing up for and what kind of structure support your journey, and how you can use that structure to not just succeed, but scale.
As structure, we'll begin by sharing the story behind WeMasterTrade, how we were formed as a funded project, not a broker, which is very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that, I will flow everything we offer, especially our trading packages, which we will be discussing in detail. We will explain the logic behind each one, what kind of trader they design for, and how the trader changes depending on whether you choose the challenge model or instant funding model. So if you ever look at our package and talk, which one is right for me? Today I will ask you that.
And more than that, we'll do a live comparison between packages. We'll break down pricing, account size, maximum drawdowns, consistency rules, and even payout side by side to help you make a fully informed decision. So it's one thing to see number on this website, but it's another thing to understand the intention behind them.
Right, and once we understand the packages, the next question is always, how do I stay confident while trading? So we'll move naturally into discussing trading rules, which honestly is one of the most important parts of today's session, where we explain what the daily loss limit is and how it's calculated, why it includes both closed and floating profit and loss, and how to avoid violating it, especially overnight. And we also go into the maximum total loss, the consistency ratio, and we'll even address common misunderstandings about trade sizing and risk for trade policies.
And we won't just explain rules in isolation. We will explain them in context with live trading decision. I will share some personal example of mistakes I made when I first started trading under funded conditions and how I adjusted. Because rule doesn't mean to restrict you. They dare to protect your integrity of your role.
And while we're on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. So we've had some amazing responses to our promotions, but also some confusion. So we'll be showing you exactly what to do step by step.
From there, we transition into a discussion of our scale plan, which I personally think is one of the most underrated parts of the trade offerings. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting paid once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. It is because of what makes us different from platform. When you try on a funded account and generate profit without breaking rule, we share that profit with you until the 90%. But there's more to it than just the percentage. We'll explain the full payout cycle, protocol, and some light today.
Now, I know many of you watching today aren't just traders, you're also educators, influencers, or people with large networks. So that's why we're also taking time to explain our affiliate program, and we'll do it transparently. We'll walk you through how commissions are calculated and how affiliate referrals are tracked, and more importantly, what you need to qualify for payouts, including a detailed explanations of two referee rules and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly and understanding the terms and building long-term income streams.
So as you can tell, this is not just a surface level live stream. We're diving into everything: packages, rules, promotions, and scale paths, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderator are watching, and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we'll leave timestamps and summaries below. And you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they really care about helping traders succeed.
So to wrap up this welcome, I'd like to say this: WeMasterTrade is not just a platform, but it's a commitment. A commitment to build real traders, to create fair structures and scalable pathways for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you're exactly where you need to be. So let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Okay, so thank you once again for being with us today. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we believe in, and why we'll build this platform the way we have. Because when you're putting your trust and your trading into a company, understand its philosophy isn't just helpful, but it's essential. And so this segment is about origin, intentions, and impact. It's about how WeMasterTrade began, what values underpin the forum, and how those values translate into real tools and outcomes like traders like you. And to work through that, I'm joined as always by two people who live and breathe these principles, Helen and Scarlett. So let's start at the beginning.
Thanks, Aidan. To truly understand WeMasterTrade, we need to understand why it's created. Unlike many prop firms or brokers that involve from a traditional financial interest, WeMasterTrade was born with a purpose-driven mission. to give a capital trader access to capital regardless of their background, location, or financial situation. We were founded in the 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built its name as signal sharing, investment network, and copy trading tech, WeMasterTrade was designed to serve a model-focused vision to identify, support, and scale high-potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note WeMasterTrade is not a broker. That's not just a label, it's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. And we take on the capital risk. We give you the roadmap, you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
That Academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibrations and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation, and we've designed the curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funding account. And to ensure that our systems and content meet global standard, WeMasterTrade is proud to hold an ISO 2018 certification, which confirms that our educational products and trading development programs meet rigorous international criteria for quality, structures, and learning engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fee. In an industry where many corporate firms come and go, WeMasterTrade has positioned itself with a real operational stability, compliance framework, and internal accountability. We're not here for season. We're here to help build career.
And we've seen that commitment translate into real stories. If you visit our testimonial page, you'll find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade helps them not just earn more, but trade with purpose. They talk about passing strategies after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. And we have students become full-time traders. We had women re-enter the finance world after career breaks, and we have young professionals from underbanked regions finally access the market with a funding account. That's the impact, and that's what drives us.
And it doesn't stop that. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog section where a team of experts and educators share weekly insights, trading psychology breakdowns, market reactions, and platform updates. We believe that learning never ends, and we keep our traders informed. So, but let's also talk about culture. So what makes WeMasterTrade different isn't just the product that is its offering, it's the community mindset. We actively promote trader integrity, respect for competitions, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on live support, you see that we're actually listening.
And I'll speak honestly here. In many platforms, the trader is just a customer. As WeMasterTrade, the trader is product. Your performance drives the business. Your work shapes the platform, and your consistency determines how far we can scale together. That multiple accountability is rare and is something we're proud of.
And if you ever doubt whether this path is real, whether a trading career is truly within reach, I encourage you to read a testimonial take a look at our friendly accounts and connect with people who've gone through the system. The stories are real, the capital is real, the results speak for themselves.
So to summarize, WeMasterTrade is a capital allocators, a talent accelerator, and an education-first trading institution. We're here to challenge the status quo of trading access, to build systems that reward performance over promotions, and to create a real scalable income opportunities for traders around the world, regardless of their starting point. But this is more than a platform, it's a trading movement, and if you're ready to be a part of it, today LiveStream will show you everything you need to know. Okay, and thank you, Alan Scarlett, for that deep and honest work through. So coming up next, we are going to take these foundations and connect it directly to actual offerings. That means we'll be discussing all the different account packages available at WeMasterTrade, how they differ, who they're designed for, and what kind of results you can expect from each. So it's time to move into one of the most essential part of this live stream, an in-depth discussion of our account packages. So this is where it all begins from mood trader, choosing the structures that best align with their goals, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about frameworks. So each package of WeMasterTrade represents a different pathway toward growth, and today we'll work you through all of them, what they offer, how they're structured, and most importantly, who they're designed for.
Exactly, Aidan. As WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we're built to distinct product line for traders. The challenge package and instant funding package. It line include a variety of account size and configurations because we know that traders come with a different strength, risk appetite, and time life.
And let's begin with a challenge model, a two-phase evaluation system built for traders who want to prove their skills before being allocated capital. This structure fair has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet specific profit targets while staying within strict but a reasonable rate parameter. There are 3 stages in total, phase 1, phase 2, and then the funding stage.
And take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. So let's break it down phase by phase.
In phase 1, you will need to achieve an 8% profit target, which is $800 without breaking a 5% daily reward down, which is 500 or 10% over last limit, which is 1,000. You have unlimited time to achieve that. That's a key difference from many brokers. We don't break for you with a deadline.
Once you pass phase 1, you move to phase 2, where your profit target drops to 6%, and that means $600. The risk rules remain the same, and here's something unique. In phase 2, you already start receiving 20% profit share if you exceed that target.
And finally, once more phase last year, you enter the funding account where you trade with a real capital, have no profit target, and your profit share jump up to the 90%. That's one of the highest in the industry.
And this account is ideal for newer traders or experienced traders who want to start with lower pressures and learn the system. If you're still refining your strategy or want to get a feel of WeMasterTrade rules framework before scaling, this is the perfect package to begin with.
So now for those who are confident in their strategy and want to start with a larger account size, we offer 25,000, 50,000 and 100,000 challenge packages. So the structures are similar, 2 phases, the same daily, 5% dailies and 10% total loss limit, but the forward target scale proportionally.
For example, in the 50,000 challenge, you will need to hit the 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains for the same 100, giving you room to adjust position sizing.
The $25,000 to $100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funding accounts. If you already passed all the broad challenges or have a strong verified trading history, this is a good setup.
But what if you don't want to go through a challenge after all, but invest want to access real capital immediately and get paid purely on results? That's where our instant funding packages come to play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced, disciplined traders the chance to trade real capital from day one. No evaluations, no demo state, just pure live trading packed by a structured, fair, and transparent system.
And want to make it even more accessible in that you can choose from several different account types depending on your style, preferences, and goals. Today we're going to walk you through 8 of the 5 main instant funding packages: a standard, a 51010, 510 euro, 51010 novice, and customize. We'll compare the detail, but more importantly, we'll have to figure out which package is right for you.
So let me set the scene quickly. All of our instant funding packages give you live trading access from day one. So that means no challenge phrases, no evaluations. You pay once, follow the rules, and you're trading with live capital. And every account, no matter the size, includes no time limit, up to 90% profit share, balance pay, drawdown, scale plan toward 1 million, support for EAs, swing trades, capping, and even HFT. So now, let's go package by package. So as we go, Helen Scarlett, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you've seen succeed with each?
Let's start with the standard package. I like to describe this one as the path program for the trader who just wants stability. You get up to the 200,000 in capital with an average manageable of 4% daily loss limit and 6% overall drawdown.
It's like that calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, there's serious earning potential even if you're taking slow and steady approach.
And how about commissions?
Competitive approach to both forward at the $4 per lot, go at the $4 per lot, index at $1 stock and just 0.017 per lot.
And everything is allowed: news trading, scaling, weekend holding, EAs, HFT, you name it.
So for the audience, if you're someone who trades regularly, understand your strategy wants a full range of assets and plans to lay alone the game, so this is your sweet spot.
It's perfect for intermediate to advanced trader who already know their edge but don't want to stretch with a target-based challenge. And if you ever had an account blow due to unrealistic rules, you'll find the standard model refreshingly fair.
I could also say it's a swing trader. Therefore, 6% risk profile gives just enough flexibility to hold multiple day positions, especially with the weekend holding fully alone.
So alright, moving off gears, a little about the 5-10-10 package. Same capital ceiling up to 200k, but you get 5% daily loss and a wider 10% overall limit. So why does that matter?
The extra cushion is massive for traders who scale into positions or take multiple entries per setup. You've got more room to breathe, especially high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you will get full support for scalping, EAs, new trading. It's very trader friendly.
This is best for day traders, especially those trading assets like Nasdaq or gold that move fast. If you got a tested intraday strategy and just need some risk breathing room, this is your package.
And also for traders who want structure but don't might have a that profit target, the clear milestone motivates some people, especially if they pay out oriented.
So now, here's a personal favorite, the 5-10-0. So you get 5% dailies and 10% overall lots, but no profit target, no.
And that's what same for high precision trader. You're no longer chasing a number, you just focus on converting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snippers. If you enter 3 to 5 trades a week, this is your space. You're not penalized for patience. You actually rewarded for it.
Veteran swing trader, risk conservative trader, people who priority consistency over speed. If that you try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This is their home.
So now for the real breakers, or rather those who don't want to be evaluators on how even their products are, the 5-10-10 no PC removes profit consistency's tracking, right?
Exactly, same 5-10 risk profile, but you're not required to keep your profit growth smooth. One big winning day is totally fine.
That's that trading copier are not allowed in this one. So it is for manual trader only, and you need to trade responsibly. But the average safe trader, who sometimes has mispriced, this is the play.
Perfect for high risk reward traders or anyone who had issues with consistency rules at other firms. You trade how you want, just keep it inside the drawdown box.
And last but not least, the customized packets. If it is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss, overall loss to your liking. Plus, you can fund up to the 200,000 more than any other account.
It's premium, flexible, and comes with all trading styles allowed, including EA's news trading, weekend holding, HFT, and more. And who's is for top-tier professionals, ex-hedge fund traders, signal providers, high-volume traders, anyone with very specific structure in mind. This package lets you build it.
I always say, if you try other model and nothing perfect, build your own blueprint with customize. That freedom is rare.
So to sum up, every instant funding a package offer comes with clear risk parameters, flat commissions, deep market access, and real profit potential. There are no time limits, and payouts start as early as 1 day in.
And no matter your strategies, scalping, swing, over, or manual, there are scale that's aligned with you. The key is picking the right one now. You can start building consistency from the start.
And if you're ever unsure, our team is to guide you. What is the real secret? Pick the account that fits you to your discipline, not your dream. The right fit always outperform the biggest promise.
So up next, we'll be walking you through exactly how to protect your account, avoid breaches, and understand the key risks and consistency rules of our entire platform. So stay tuned. This is WeMasterTrade, where real capital meets your strategy.
We copy trade.
Alright traders, you've seen the packages, so let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you're funded. So let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason for the loser account, it's come to one thing, the daily loss limit.
Yes, the trade daily loss is the one rule traders they understand until it kicks them out of 17 p.m. on a random Tuesday.
But here the good news, when you understand how it works, really works, it's become one of your battle for risk control. So today let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of fuel you're allowed to incur, the both floating and flow trade, on any single trading day. If your equity falls below that limit, even for the moment, your account is automatically closed.
And the key things in here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction and it's what trips a lot of people up.
Let's work through a live example. Imagine if the start of day 5 your balance is 105,000. Your equity, however, is higher at 107,000 because of open floating profit.
And if you're on a 4% day loss limit, we calculate as the higher number 107,000.
So 4% of $107,000 is $4,000. That means your equity for the rest of that day can drop below $102,000 or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating lots and you haven't closed it yet, if your equity dipped below the threshold for even a second, or that's it.
Now, let's reverse it. Say it's the start of day 7, your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since the line is higher, we made 4% on the initial balance, so there are $4,000.
So your equity limit stays above 96,000 throughout the day. If it drops to 95,999, auto liquidation kicks in, no warning, no margin call.
And the system will send a market order to close all trades, everything liquidates. Your account is disabled and you can't trade again unless you purchase a new package.
And here's the kicker. The outflow happened when the system detects the threshold was crossed. But due to the market fluctuation, your final profit and loss might look worse than the actual threshold. That's because the system gives a closure based on the price paid at the time of liquidation.
So even if you only intend to take like a 3,900 loss on slip haze spike and goals your net dash and certain lasers 4,200, oh that's why we don't say don't run the edge.
And the tip and tricks to stay within the daily loss rule. Alright, so let's talk about how to avoid violating this rule because this is where the broke mindset gets in.
And for the first step, know your buffer. Never plan trade to take you right up to the end of your limit. Leave at least 10 to 50% room below the market loss, especially in volatile market.
Tip 2, track your equity, not just your balance. I can stress this is not. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you're heading toward a violation.
Tip 3 is a dashboard or a tracker. In WeMasterTrade, we provide three boards that show your live product status. Use them, check them, don't rely on your memory.
Also, pause trading after the big loss early in the day. If you lost 3% in the first hour of lending session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hours. If you're trading gold during the FFP with a full loss size, you're practically begging to break the daily loss rule, cut position size, and ride post volatility.
What are the top rookie mistakes you see when it comes to daily loss?
The number one, over leveraging. Trader open positions that are 5, 6, 7% of their account, thinking they will flow quickly. But if the trade turns red flag, it's already too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a city big gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that closed trades are all that matter, they're not. Remember, equities include both floating and closed positions, so the total equity line is your score.
I always say this to new trader, the daily loss rule isn't your enemy. If your account airbag is designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can't be aggressive, but only within the box. If you learn to trade inside the box, you'll last longer than 90% of the market.
And one last note, this isn't just about rules, it's about trust. And we MasterTrade funds you because we trust that you'll manage risk responsibly. The daily loss is there to protect that trust on both sides. Okay, so now that we have covered the daily loss rule, and if you haven't already, click that one, you're missing out. But now we're moving on from the daily lamp boundary to the absolute boundary. So I'm talking about the maximum loss rule, also known as your account stop loss. So the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limits, so I'm fine. But then a week later, they change the way at their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seat belt, then max loss is your airbag. If that limit is hit, it means the account is still unsalvageable under your current trajectory and is closed immediately.
So what exactly is a max loss rule? Let's define it simply as the total maximum amount you're allowed to lose across all trades for the entire account. If your equity, that is your real-time capital including open trades, ever dropped below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which percent every day, this one doesn't exist. It's cumulative. You can lose 2% one day, 3% next day, and if your total loss crosses the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you start with.
So let's go through a concrete example. Suppose you have an instant funding account with an initial balance of 50,000 and your max loss limit is 6%, which is 300.
And that means your equity never go below $47,000 ever. Doesn't matter if you make the 1,000 yesterday, the total loss from your highest point back down that the threshold is what matters.
And remember, this rule includes both closed losses and flowing losses. So if you lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at $46,800. That's below the limit account closed.
And just to be clear, it's not about the net gain or loss across all trades. It's about where your equity stands in real time relative to that stop loss floor.
And when you're in profits, here where it gets interesting and a little tricky. Let's say your account grew to the $51,000, correct? You're in profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fall before you hit it.
Exactly, you have 4,800 in total buffer because 51,000 minus 47,000 equals 4,000. So your profit gives you cushion, but the floor never moves.
And what happens when you break it? Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers, all trades are closed immediately at the market price.
And again, like the daily loss, if there are volatility or slippery, your account may close out below that line. That's just execution reality.
And most importantly, once it reaches that account, it's permanently disabled. You need to purchase a new package if you want to continue trading. No reset, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
And first, track your total low losses every day. You should always know how close you are to your max loss floor. The wait for the dashboard warning, calculated manually.
Second, use your profits as protection, not permissions. Don't treat floating profit as a grid line to increase risk. Instead, consider locking in gains by reducing loss size when you are ahead.
Third, manage your floating raw debt effectively. Even if you're positive overall, a positive trade with poor stop placement can take you from safety to shut down in a few minutes.
Fourth, stay cool when you're close. If you're down 5% out of your 6% limit, that's not the time to double down. That's the time to step away, pause, and retain your entry.
And for the biggest mistake, that is underestimating flowing drawdown. Traders close to 3 losers and think, okay, I'll still got room, but they forget about the fourth trade flowing minus $1,800.
On the second, trader who just recover after a bad day, they lose 4% in one day, come back springing the next day thinking they will make it back, and instead take another 2% and boom, violation.
Third, and this one hurts, ignoring sleep page during major news. Even with a tight stop, newcomers can gap you straight through a limit.
The market loss rule is there for a reason. It's not that the punish you, it's there to protect you from yourself. Every successful trader I know sees that stop loss, whether personal and institutional, as a non-negotiable boundaries.
Right, it's a reality check. If you're consistently pushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
So at WeMasterTrade, we're not just giving capital, we're teaching structure, and the mat loss rule is what separates gamblers from professionals. So remember, your mat loss is a percentage of your stock-to balance, typically 6% or 10%. It's calculated using equity, not balance, and it includes both close and closing losses. And once breached, your account is gone. So coming up next, we'll be exploring the consistency rule and why steady profit matter than the big spike when it comes to growing, scaling, and getting paid.
If you ever make $5,000 in one day, then make $200 the next 4 days, and wonder why your payout got flat, this next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Stay with us, this is the WeMasterTrade LiveStream where structure meets opportunity. So we have talked about the daily loss limit and we've just covered the maximum loss rule, two pillars of protecting your capital, but now it's time to shift gears just a little and not talk about it, but also about results. So because here the things is not just about staying alive in the game. At WeMasterTrade, we want to see trader grow, scale, and can actually earn. And to do that, you need just more than just a winning day. You need something called profit consistency.
The rule right here, the profit consistency rule, it was upgrade of lucky spot from a reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winner and roll the dice.
And more importantly, it also how we evaluate if a trader is eligible for withdrawals, profit sharing, and even scale up. So if you're funded and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even profits are from day to day. The more balanced your profits, the lower your ratio. So So the less consistent, meaning you had one giant profit day, and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit comes from one day, that's not consistency, that's a loss or risk. What you will want to see a trader who make profit day after day, even if it's more. That's what we can scout.
And how is it calculated? The formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you start the account, then multiply by 100.
So the best day divided by total profit multiplied 100 equal your profit consistency.
And just to be clear, the bad day refers to your highest global profit in a single calendar day. A total profit is sum up all your core profits minus any global losses or open losses across the life of the account.
Let's say you had the following results over 5 trading days. Day 1 you earned $100, day 2 earned $200, day 3 minus $50, day 4 earned $100, and day 5 earned $64.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal the 410.
And your best day was day 2, that's $200 in profit.
So now we apply the formula to $100, divide $410 and multiply that by 100 and you'll get a profit consistency ratio of 48.78%.
Now let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they couldn't qualify for the payout yet.
So even though this trader is profitable, if they're not consistent enough, they had one big day that made up almost half of its total profit. It's not sustainable, and that's what we're looking at here.
And this is where I really want to speak to a trader. If you rely on one or two big days to carry your entire account, that's not professional trading, that's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scale up, who get feeders, who get trust with more capital.
So, alright, let's address the number. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. And so let's say you're over the limit, don't panic, you're not disqualified. You just need to keep trading and even out the curve.
And here's how to do that. The first one, trade smaller size for a few days. The next one, trade smaller, control swing arm for the 200, 300 day. The next one is avoid big swing trade that could spoil your ratio again. And the last one, risk profits across multiple days, not one month setup.
And for those using EA's mandatory equity curve, if your EA is going profit heavily into one day, you might need to rebalance it. The buy might be profitable, but it won't pass this through unless it's configured with payout logic in mind.
And a common mistake to avoid is step 1, traders hitting target early, then taking the rest of the week off. That inflates your best day and leaves the rest of your curve flat.
Mistake 2, overtrading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
Mistake 3, thinking this route is just a hurdle. It's not, it's a reflection of what we're actually looking for our master traders.
And why does rules matter? At the end of the day, this isn't about controlling you. It's about building habits that can handle scale. And if you can be consistent without the 25,000, what happens when we give you the 100,000 or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you're serious about long-term trading.
And we've seen it in time again, the traders who respect this rule, they're the ones who get multiple payouts, referrals, and grow into six-figure funders accounts.
So don't fear the rule. Understand it, use it as a feedback tool. If your ratio is too high, great. That means you've got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade does will calculate your profit consistency ratio automatically. You can check it anytime under your specific tab.
So to recap, this rule is about balance, not volume. Aim to keep your bets again at 20% of your total profit. Spread your wins, record multiple sessions, and monitor your progress in the dashboard. So, now that we have talked through the daily loss limit, tackle the maximum loss, and examine how public consistency shapes your long-term payout and growth, now we arrive at the final and perhaps the most overlooked rule of all. So the risk consistency rule, or what we call the discipline test.
That's right, traders are hunting the biggest enemy in the market, but usually it's inconsistent, especially in how much you're risking from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you're managing your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
So let's break it down at its core. The risk consistency rule is simple. You're not allowed to lose risk more than 2% of your initial balance on any single trade idea.
And that includes all losses associated with that trade idea, both flow losses and floating losses. Even fees, commission, and swap are counted.
And for some accounts, like the 510 no PC package, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
So because consistency isn't just about the outcome, it's about the process. So the more erratic your position sizing is, the more volatile your equity curve becomes, and that's what makes you hard to scale.
This rule protects both you and the firm. It's help reverse capital, prevent large equity swing, and make sure your assets lay out over time.
Think of it as your account heartbeat. If your position size pushes up and down, 0.5 loss one day, 5 loss the next, the system flags it. That's not structure, that's chaos.
So this is where it gets technical, but stay with us. The term trade idea isn't just one order, it's a group of traders share the same logic.
And if you open 3 vibrations on go at different times and you close them within 3 minutes of each other, that's one trade idea.
Because if it's the same symbol, same direction, and close around the same time, even if you open them at a different times, they're seen as a single, unified position from a risk perspective.
So the system doesn't look at your trades in isolation. It groups them into logical bundles and applies the 2% rules across the entire bundle.
And once alone, you can have a multiple separate trade idea as long as if one respects the risk limit.
For example, if you go long on gold, short on GBP, GBY, and short on AUD/USD, and each position has its own distinct direction and access, those are 3 separate trade ideas, and each one can risk up to 2%.
Let's say you go buy on go and then you go buy again. Now you have 3 open positions in the same directions and the same asset.
Yep, the system treats that as one trade idea. So if the combined floating risk or even true loss from those positions exceed 2% up your starting balance, boom, you've broken the rule.
Another mistake is opening multiple goes by, then closing 10 minutes later, and 2 others together. The system still group trade flow within 3 minutes of each other. So be mindful of your closing timing.
So let's go hands-on. Suppose you have a 100,000 account. The 2% max risk per trade idea means you can't lose more than 2,000 in a single trade idea total.
So you open to go buy 1 last egg. You don't play a stop loss. New heads. Market drop out 100 pips. It's lot lose 1,000 and that 2,000 total.
You're right on the line. If slippage or swap adds a few extra dollars, that's it. Rule broken. Account flagged or liquidated depending on enforcement model.
And in some accounts, especially instant funding account with stricter tolerance, this breach may result in lots of funded status or immediate closure.
And pro tips to stay risk consistent. Tip 1. Set your lot size based on account risk, not emotion. Know how many pips equal 2%.
Tip 2. Use stop loss order regularly. Set them based on risk per trade idea, not random chart level.
Tip 3. Don't start trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you're entering on the same setup, treat it as one, cite it accordingly.
Tip 5. If you want to split an idea into multiple and try, do it smart, scale and smaller, use micro lots if needed, keep the total exposure below 2%.
And the most common reason traders break this rule, stacking multiple entries on one trade idea thinking is still separate.
The second opens a high-risk trade after win, assuming they are playing with the house money. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating red still counts for a good 2% risk.
And why we afford this rule? This isn't just policy. This is professional practice. Has a fund follow this, bank follow this, real trader follow this.
Exactly, we're not here to micromanage you. We're here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that small, consistent risk is the foundations of scalable capital, those are the ones who we grow, and those are the traders who grow from 25K to $1 million.
And if you want to be a professional trader, you have to think like one. And professional trader always know how much they are risking on every trade every day.
And if you're still guessing your lot size or open trades because setup feels right, take this as your sign, step it up, get structure.
And this is more than just a rule, it's a habit. Build it now, and the path to bigger capital and larger payouts become way more predictable. And that, my friend, wraps up the 4 essential rules at trading at WeMasterTrade, which is the loss, maximum loss, profit consistency, and risk consistency. Master these and you're not just stay compliant, you're building a foundation for serious capital management, long-term payouts, and scaling. So, next up is the economic analysis of today's news calendar.
Okay. Split next.
Okay, to the first at 10:30 a.m. to 1:30 p.m. Let's start with Japan. The Bank of Japan keeps its policy rate unchanged at below 0.5%, exactly as expected. No surprise here, no surprise there, but as always, traders were watching the monetary policy statement and press conference for clues about the POG future stance.
And the messages from the government yield were very clear. Japan is not ready to fully accept from its internal policy stance, although the BOJs had technically moved away from negative interest rate earlier this year. It still won the Moldovan central bank locally.
Exactly, they emphasized again that inflation, while ticking higher, is still considered cost push and fragile, not yet backed with strong demand. The POG seems hesitant to raise rates aggressively without a solid rise in wage growth and domestic consumption.
As a result, the TPY weakened sharply across the board after the press conference. USD TPY climbed half reason resistance, and EUR TPY also rallied. Trader interprets the POJ tone as a signal that any further tightening could be delayed until the Q3 or 4 or even the 2026.
It's a good reminder that in Japan, monetary policy is still operating under different rules compared to the Fed, ECB, or BOE.
The next event is Euro's economic sentiment at 4 p.m. Now, according to Euro, the German economic sentiment surprised to the upside today, coming at the 34.8 compared to a forecast of the 25.2 and up sharply from previous 25.2.
That's a significant improvement. The TEW survey reflects the expectations of financial market experts on the future economic situation. So this bounce suggests growing optimism about Germany's outlook for the next 6 months.
Especially encouraging, considering that Germany had recently been flirting with the technical recession. This rebound sentiment could signal that the world may be over for the Eurozone last week economy.
Markets reacted positively. The Euro USD pair rebounded and German fund yields ticked slightly higher, indicating that investors may be reassessing ECB rate cut expectation.
And with inflation in the Eurozone still sticky, stronger sentiment could give the European Central Bank more room to hold up on further cut this summer.
And the next is about US core retail sales and retail sales at 7:30 p.m. Now onto the big one, the US retail sales data. Here's what came in. Core retail sales, including autos, plus 0.2% as expected, and headline retail sales minus 0.5%. A big miss, plus 0.2% forecast.
That's headline number were a major disappointment. A negative green line the signal a possible slowdown in consumer spending, which make up over 2/3 of US GDP.
It also raises questions about whether the tight monetary policy from the Fed is finally starting to bite. With credit tightening and savings rates dropping, consumers could be pulling back.
Interestingly, core retail sales still show moderate growth, suggesting essential and non-auto spending remains steady, but the broader negative green streak USD weakness and we saw goes bow, while the equities with caution.
For traders, this creates a dilemma. Does the Fed pose longer or move ahead with rate cuts sooner if data continues to soften?
It's too early to say, but the market may start pricing in the possibility of the September rate cut, especially if the next PCE inflation data confirm disinflation.
Well, let's recap today's action. TBY dropped after Dover's BOG tone, no hike expected soon. Euro strengthened on upbeat German due data. USD missed soft retail sales pressures the dollar, through no core numbers kept Fed cut hopes balanced.
Exactly, I thought of divergence. One central bank BOG still dovish, another ECB cautiously optimistic, and the fast cut between inflation control and weakening growth.
And up next, watch out for US jobless claims on Thursday, global flash PMIs on Friday, comments from Fed Chair Powell and other policymakers later this week.
And don't forget the ongoing geopolitical tension, especially in the Middle East and trade relations. They could create sudden volatility.
That wraps it up for today's macro breakdown. If you're trading these events, stay sharp, manage your risk, and don't chase volatility.
So, thank you for such an in-depth analysis of today's news calendar. And thank you all to our audience for joining us today. We hope this session has been informative and that you're as excited about the opportunities here at WeMasterTrade as we are. So remember to like, subscribe, and share the live stream with others who might be benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and trading tips. Stay tuned for our upcoming events, and we look forward to seeing you again soon. Until next time, happy trading.
We copy trade.